Welcome back. Shivanshu Mehta, head Bullion at MCX, now joins us. Shivanshu, hi. First of all, congratulations are in place because back-to-back, we're looking at more products and assets being launched on MCX. You, of course, are going to be talking about the monthly options when it comes to silver, which is getting launched today, 5 kgs and 30 kgs. I want to take a step back and ask you on how the reaction has been to gold monthly options, and is that what pushed you to get into silver as well?
Yes, thanks, Manisha. In fact, just for perspective, as per the FIA study, you would be aware that MCX is the largest commodity options exchange globally by the number of lots traded. And for gold as well as silver is the second largest globally. Now, in keeping with that, our options seem to have come of age in terms of participation by both the bullion and jewelry fraternity for hedging, as well as by the investors and the retail traders, basically. So yes, we introduced the monthly options in gold in the benchmark 1 kg contract in the month of November last year. And for the remaining portion of the year, November to 31st March, the turnover was seen 3x. And this basically brings a lot of benefits for the small to medium hedgers because the premium becomes economical. There are various tenors of different number of days available for hedging jewelers who can hedge their inventories better, flexible pricing, etc. So we remain committed to the hedgers, and we did this. So yes, the numbers basically in FY24 gold options was around 6,100 crores, which reached for the FY24-25 to 28,100, and that is the kind of numbers we saw. And with silver, as you're aware, this portion of the year we have larger tenors between September to December and December to March. So we feel that this is the right time. We were waiting for this time to launch monthly expiries in both the silver options that we have. Yes.
Just to get a sense on the kind of volumes that we see from MCX, Shivanshu, whether it's about bullion, energy, vis-a-vis metals, where do you see a better traction coming in?
Yes, I think if you talk about bullion, the growth has been across the board in bullion futures as well as options, both. And as you're aware, it serves the industry with a domestic price benchmark as such. And the spot and futures integration is seen via the delivery nature of our contracts. We saw 600 tons of silver being delivered for the calendar year. And I think that again proves the point that both as a hedging platform as well as for retail investors who may like to do a cash and carry calendar spread, etc. There are various use cases that these products are serving. And I think definitely the growth has been more evidenced in options of late, maybe with the geopolitical and the macros playing out. People have understood the test use case for options, and that's an encouraging sign.
You've recently done away with the additional margins as well. Do you think that would be supportive as well in getting more participation?
Yeah, as leaders, we've always remained committed to serving the industry whichever way we can. Yes, the additional margins in both gold 2% as well as silver 3% have been rationalized, and I think the industry has given a thumbs up. I think it makes way for efficacious hedging and better capital deployment into the physical bullion and jewelry industry, keeping the cash management better. I think these things are playing out, yes.
So clearly, Shivanshu, risk management and hedging are one part that is done on the platform. How are you also looking at investments, SIPs, and silver, of course, being an industrial metal as well? Do you see the industrial companies side of industry also coming in here?
Yes, we've had the patronage of silver in terms of the importers, refiners, traders, as well as the end-use industry on the MCX, along with gold. And as such, that has only been growing. And like I said, that silver also sees heavy delivery volumes, which again proves the point of spot to futures integration. And as far as your other question is concerned, SIP, yes, we have the coin products in the gold 1 gram, 8 gram, and 10 gram recently we launched on the 1st of April. So people can accumulate these products in electronic form via our Commerce e-warehouse receipt management system. They can hold them, they can take the physical delivery out as and when they desire. So maybe evidenced in the numbers, yes, we've seen in the silver 1 kg format, 1 kg bar has gained popularity as a retail product. We've seen more than 600 tons delivered since it was launched or introduced in 2020, 21 thereabout. So yes, I think people are using these contracts because they come with a delivery period towards the end, all of them compulsory delivery, and there's a funds pay in and payout on each one of those days. So it behaves like the spot market for that portion. And yes, there's tremendous vibrancy in the SIP environment as well via these contracts.
Thank you so much, Shivanshu. Thank you so much, Manisha, for joining in, giving us a sense, number one, of what exactly the commodity market is doing and also the prospects of MCX going forward.